Okay, well, welcome to this Brit Events Northwest YouTube video. My name is Steve Caldwell, General Manager of Brit Events Northwest. From time to time, we look at issues where Brits are familiar with the system back in the UK, but not familiar with the system over here in the US. And during the fall of this year, we're going to be looking at the issue of being an independent contractor. There's likely to be some growth in this sector because of everything that's been happening with the pandemic, and also because people have had their hours cut or reduced or need to top up their paid work in some way. And this YouTube video / interview is going to focus on the tax situation and independent contractors. And to help us with this, I'm pleased to welcome Moses Mann of M Squared Tax. Welcome, Moses.
Hey, Steve. Hi, how are you? Thanks for having me.
I'm good, and good to see you. It's been a while. I think it was January when we last met up. It may be another January before we meet up again.
Yeah.
So just to let people know, if you want to find a bit more out about Moses' background, he is one of our appreciated sponsors. And if you go to briteventsnw.com on the homepage, you'll find a link to M Squared Tax and get more information about his business. Okay, Moses, let's make a start. So first one, as tax so much involves the IRS, is it the IRS who decides if I am an independent contractor?
Okay, so good question. Thanks for that question. Generally, the IRS does not decide whether you are an independent contractor or not. So one of the more common questions I get is whether I'm an independent contractor or whether I'm an employee. And to answer that question, the answer to that question really gets back to employment laws. And the employment laws will dictate whether you're a independent contractor or an employee. Generally, the distinction, in most cases where I've seen it, the distinction is whether you have the ability to dictate how you do the work, when you do the work, where you do the work. These sort of factors will help determine whether you're an independent contractor. For example, if I have a tax firm, a CPA firm, and every now and then I hire seasonal workers to come work for me during tax busy season. But they're here, when they come work for me, they have to adhere by sort of my firm rules, in regards to how you prepare a tax return, how you maintain client confidentiality information, when you come to work. So if you look at these factors, using this example, most of the seasonal workers are going to end up being my employees because I'm able to dictate the manner in which they perform their work.
Right. And that's a sort of key area where Brits who are familiar with the system in the UK would not necessarily recognize the term independent contractor, because the language that's used in the UK is more self-employed worker. And so this concept of independent contractor is one that isn't always easy to understand. But that leads on to my sort of second question. So is it only sole proprietor businesses that, for instance, receive 1099 MISC forms, which have been, personally as an independent contractor for 15 years, that's the only tax form I ever received?
Generally, yes. If you are an independent contractor, the person or the company that is paying you will give you a Form 1099 at the end of each year. Probably around January, February time frame, so you can go and file your tax returns. the 1099 reportings are actually very important because for for companies or individuals who are supposed to issue 1099s, and if they don't, there's a big penalties for not issuing 1099s on time. Because remember, the only way the IRS is going to collect their tax from independent contractors is relying on your the person or the company that's paying you to report that, hey, I have paid Steve $1,000 this year, right? Because without that type of reporting, Steve, you can go by without, not that you will do it, but you could go by without reporting the money and nobody will ever know.
Right, and that gives me a supplementary question based on my personal experience. Will I always receive a 1099 form if I have independent contractor earnings? Or is there like a minimum?
Yeah, no, there's definitely minimum. I believe the monetary threshold is $600. I could be wrong on that, but it's something small like that. So if you get paid under $600, you probably won't get a 1099 miss. Also, if you're a corporation, because some independent contractors set themselves up as an S corp or a C corp. If you're a corporation, the person paying you generally do not have to issue you the 1099s.
Right. So you're not necessarily going to get a 1099 for every instance of income of this type. And I think people who are new to this probably wouldn't understand that unless we told them. And they probably couldn't work out why their income is different from what's being given in 1099 forms. So in terms of, I think you've already told us when you're likely to receive those 1099 forms. What about how you report those 1099 forms? So the question is, do you have to be a business to be an independent contractor? So do you have to file a Schedule C on your IRS forms?
Yeah, so you, well, I think, so let me help kind of rephrase that question a little bit, if I may. So a Schedule C, so for those that don't know, a Schedule C is a schedule that you attach to your 1040, your individual tax return. And on the Schedule C, I believe the title of the Schedule C is income from a business or a sole proprietorship, something along those lines. And on the Schedule C is literally a schedule where you list all the money that you made, all your income. And in the middle section of the Schedule C, there's about 15 or 20 different types of expenses that you list out. And these expenses gets deducted against your income, and you arrive at your net income, which is the amount that would be taxed on your tax return. There are, just to give you an example of what type of people fill out Schedule Cs. Number one, independent contractors, right? People such as Steve, if you have your own company and people are paying you, giving you 1099s, then you report all of your income on that Schedule C. And minus all the expenses that you had incurred to sustain or help run your business. So that's type number one. Type number two are, I've seen folks and clients who make money from hobbies, right? My wife, for example, she takes photography, and sometimes she photographs weddings and family pictures, and she makes a few $1,000s a year doing that. And that, even though she's not an independent contractor, right? No, I mean, she doesn't really have a business, it's just a hobby, but she's still receiving money, generating some sort of income. So thus she has to report that on Schedule C.
Right. So she's still able, even in those circumstances, to claim business deductions because she's filling in a Schedule C.
Mm-hmm.
Right. I think that's an important point. Because another potentially big difference between people who are familiar with the system in the UK and over here is that it's very rare in the UK. It's very often an either or situation with the Inland Revenue in the UK. you're either self-employed or you're employed. So there's a very small number of people who might be employed full-time and also self-employed because of the rules in the UK. Now, in the US, I guess a lot of the people who may be watching this video will be thinking this is a potential for supplementary income. So is it easier in that sense to be both employed and an independent contractor reporting a Schedule C?
Yeah, that's actually very common. I have clients who are, regular employees in their day job, and at night they have, they have a side job, a side gig where they earn some extra cash on the side, and so that's a very common occurrence.
Right. And in terms of keeping the income from the employment and the independent contracting apart, what would you recommend in terms of like an accounting or bookkeeping procedure, and how the money's handled from the independent contracting income?
So it really depends on the volume of your business, the volume of the transactions. If it's a simple business, like let's just take two extremes, right? Let's take my wife for example. She probably photographs 10 to 15 families a year. So that's 10, 15 income streams, not a whole lot. I can easily track that in an Excel spreadsheet. Her expenses, she rents a camera or even buys a camera, buys some equipment. Again, not a lot of materials or purchases that she needs to make. So those can all be done in Excel. I always encourage my clients just be proactive about tracking your expenses. Don't wait until the end of the year to kind of gather everything up. On the other side of that spectrum is, you could have a client that sells a lot of stuff on Amazon. And the volume of the transaction, we're talking about 50 or 100 a month. And, if you're, buying inventory to sell at Amazon, you keep purchasing inventory and there's a lot of transaction going through. In these type of examples, then I would recommend hiring a bookkeeper. That's their job every day, is they are handling your books, tracking your money in, tracking your money out, and they would keep it in a very organized fashion for you. So and frankly, number one, two things with a bookkeeper. Number one, it saves you time from having to do all this because you have a day job. You don't have time, and you don't have time to track all your money in, money out. And number two, it makes it easier to do your tax returns at the end of the year because you've got an organized set of financial statements in which you can prepare your tax return.
Right. And adding on to that, really not so much a tax issue, more of a accounting issue from our personal experience, is it probably is highly recommended to have a separate checking or savings account to receive the independent contractor income into, to avoid the issue of commingling. Is that correct?
Yep. That's true. Yeah, I always encourage my client with a small business or a side business to have a separate account. That's just to keep it very keep the two very separated.
Yeah. So I've been used to paying my tax as I go along with the employer. With this independent contracting work, when am I going to pay the tax on that?
So if you're an independent contractor, so again, just to reiterate what you just said, right? If you're an employee, every time you get a paycheck from your employer, they already take out some taxes, right? So instead of getting $100 in your bank account, you probably would get 70, right? So it's kind of a pay-as-you-go system if you're an employee. And at the end of the year, you do your tax returns. It's either you owe money or you get a refund, right? But as an independent contractor, nobody's really taking the taxes away from you, right? So it's very important for an independent contractor to make quarterly tax payments. And the quarterly tax payment is due every April 15th, June 15th, September 15th, and January 15th. And if you make these quarterly payments, then in April, when you file your tax returns, you're not stuck or be surprised with a huge tax bill. And frankly, by making these estimated tax payments, you are also preventing underpayment penalties, because the IRS, the tax law requires you to make a certain amount of payments throughout the year. And if you don't do that, you get penalized for it.
Yeah, I learned my lesson on that once and never, never again. So yes, that underpayment penalty is a bit of a shock if you didn't realise that was going to happen. What about Medicare and Social Security taxes? How's that handled?
So, excellent question. This is probably the one of the biggest costs of being an independent contractor, right? And is the self-employment tax. The self-employment tax are actually made up of two components. One is Social Security and one is Medicare, all right? Social Security is about 12%, and Medicare tax is about 3%. So combined is about 15%. Now, as an employee, if somebody's paying your salary, your employer is on the hook for half of that tax. You as the employee is on the hook for the other half of the tax. And again, these type of taxes are taken out of your paycheck every single month or every single week, however often you get paid. But as an independent contractor, remember, you're both. The IRS looks at you as both the employer and the employee. Therefore, you are on the hook for the entire 15-ish% of the self-employment tax. That is on top of the federal income tax that you have to pay. So that is a cost to be an independent contractor. So you will have to pay a slightly higher tax because of this self-employment tax.
So when you make the quarterly estimated payments, is that just going against regular tax, or is it going against the regular tax plus the Medicare and Social Security payments?
When you make your quarterly payments, it goes against both.
Okay.
So if you make, you make $100 tax payment, this $100 just gets thrown into one big giant pot. And then when you do your tax returns at the end of the year, you add up your federal income tax and you add up your self-employment tax, and then you have to compare these two taxes, you add them up together, compare to the quarterly payments that you paid, and see which one is bigger.
Right. Now, we've sort of touched already on business expenses in relation to independent contractors. I know from my personal experience, there's two things that are treated somewhat differently than the rest of the business deductions. And there may be others which you may know of that I don't. The first one is in relation to claiming standard business mileage on a tax basis. It's not automatic, is it, that everyone who's an independent contractor can claim that standard mileage deduction?
Yeah, so if you're independent, if you're self-employed, you can deduct vehicle expenses. And there are two ways to deduct vehicle expenses. One is by, one is by the mileage. So you keep track of all your business miles and multiply by, I think it's about 56 cents a mile, something along those lines.
I think it's 54.5 at the moment.
54.5?
Yeah. Because
okay.
I do
yeah. So,
and it tells me.
yeah. So, and Steve, I know you travel a lot, so I'm sure you're keeping a close eye on that.
It's the biggest thing for me, the biggest deduction. So,
yeah. So, so this method number one, right, is the simple standard mileage deduction. Method number two is actual, right? Actual is you keep track of all the costs of, you know, your gas, your repairs, your car payments, um, all the actual costs to maintain this car. And then what you then have to do is you have to prorate it. You have to, and again, very important for under both methods, you have to track your business miles,
Yeah.
right? Business miles are, you know, you're traveling to your client site, you're going to anything that's work related, you have to track those miles. You take a percentage of your business miles versus your total miles and multiply it by the actual expenses.
Right.
Then what you do is you compare what is bigger. Is the mileage method bigger or the actual bigger? That's the one that you usually then choose the bigger of the two.
Right.
Yeah, there's been a lot of my clients like to buy cars. You know, because if you are driving for business, having a car, purchasing a vehicle can lead to a very substantial tax deduction.
Right. And I think that one of the main implications of tax on in relation to cars is that tracking, because it's all too easy to lose track, and that's why you know, I always recommend there's plenty of really good apps out there that help track your mileage almost automatically. But we'll deal with that elsewhere, because one of the things we are going to do, because not today, but in some other stuff we'll be doing, is looking at particular industries and how they approach this whole issue of how much you have to do yourself and how much they will do for you. So, for instance, in things like Uber and Lyft, you know, those businesses do a certain amount for you that helps you with your tracking. So I wanted next to come on to the second area I know fairly well, which is the issue of being able to claim a home office deduction. Will that apply to everyone who's an independent contractor, or are there some rules there?
Um, yeah, so the home office deduction, you know, again, you're spot on, Steve. It's a very common deduction for independent contractors. Um, Obviously, you know, the name is self-explanatory. If you have a home in which you use as your office, you could deduct part of your home. Now, there are generally two methods to deduct the home office deduction, right? One is just like the car, one is the standard deduction, which is $5 per square foot. You know, you look at your home office, trying to estimate the square footage and multiply it by $5. All right. Um, the second option is the actual, which is you take all the actual costs of your home. I'm talking about real estate taxes, mortgage payments, repairs, utilities, internet, all of that stuff, and you add them together and you multiply it by a percentage based on your total home office square footage divided by your entire house. All right. And whichever one is bigger, you take that. And with the actual method, you can also take what they call depreciation on your house. And depreciation is oftentimes a very substantial
Right.
deduction. Yeah.
Right. And in my case, it's always been the case that the standard deduction has been lower than doing the actual. So, but it's for everybody to decide individually.
Yep, that's right.
We nearly got a good shot of your forehead then.
Yeah, my phone's running out of battery, so I'm just.
Oh, right. Okay. Yeah. Yeah. Okay. Well, we're on to the final stretch. The other type of independent contracting work that we haven't talked about is people who basically work from home entirely. And
Actually, Steve, before you go on, let me. Yeah, sorry, Steve. I think my connection is getting back. Can you hear me?
Yeah. Yeah. Okay. Yeah. We had a bit of
Okay, I think it's getting better.
a small interruption. Yeah.
Okay, I think it's got better now. So there's actually just one more really important deduction that I want to point out.
Oh, yeah. Sure.
and this is called the qualified business deduction. Qualified business deduction. What this is, this law is relatively new. It came out in about it came out around 2018. And basically, at a very high level, all right, is if you're an independent contractor, if you have a Schedule C, whatever net income that you have, so you take all your income minus all your expenses, the net income, you get an extra 20% deduction off your net income.
Wow.
All right. So there are tons of limitation to this 20% QBI deduction. But just remember, if you are self-employed, the key thing is make sure that you are, whatever tax software that you're using, remember about this 20% deduction that are only available to self-employed small businesses. It is not available to employees. So it's 20% of your net income, subject to a number of limitations. So just, don't forget that.
Right, yeah, because I can't remember. I use TurboTax, and I guess I must not meet one of the criteria somewhere. Okay, so the people who just work at home, don't venture out anywhere, can they still claim, for instance, a portion of their cell phone bills, landline bills, internet bills, which is being used on working from a computer at home?
If they're an employee of somebody, the answer is no. But if they're independent contractor, then yeah, you can deduct those type of expenses.
Right. And is it, how do they sort of approach that if let's say there's just one internet bill for the household, and they're using, let's say, a landline that's shared in the house for some of their business work or the independent contracting work?
Well, I say, if you have a home office, then you can do the square footage proration.
Oh, right. Okay.
If you don't have a home office, then I always tell my client, just take a reasonable estimation. I mean, don't be too aggressive and deduct the whole thing. Maybe chop it in half. Your internet bill in half, and then take half of it. So.
Right. The last question I have, maybe the trickiest one. And it's based on an experience I had some years ago, and I know there's other people who do this. If I work virtually for a company outside the United States, is that counted as foreign income?
If you work virtually for a company outside the United States, are you self-employed or are you an
self-employed.
employee?
Yep, self-employed.
Okay, so
I'll give you my example. I did some telephone research work for a business in the UK for about 3 months, and they paid me through PayPal, and that went in to my UK PayPal account that then was transferred to my US PayPal account. So I think at the time I included that transferred amount as being part of my income, but I didn't say it was foreign earned income. I just said it was income from, and there was no, there's not going to be a 1099 generated because it's a UK company.
Mm-hmm. Yeah, so Steve, you did it right. I mean, so the rule of thumb is, if you're a U.S. citizen, U.S. resident, right, you have to report your worldwide income, right? Doesn't matter if you earn it in the UK or you earn it in the U.S. So if you're self-employed and you have a client in the UK, looks like you probably did the work in Seattle. for your client in the UK and they paid you, you still have to report that income. The same is true if you travel to the UK and you perform the work while you're in the UK, you still have to report all of that income.
Right, right.
Yeah.
Okay, that's all the questions I had. I didn't know if there was anything else you wanted to add as a final comment.
You know, final comment. I mean, there's just so much going on in the tax world, especially during an election year. So I say, you know, for those that are thinking about being an independent contractor, or the people that are already an independent contractor, do some tax planning. Don't wait till don't wait till tax return day to figure out how much you
Right,
owe and how much you have to, or how much refund you're getting. You know, sometimes getting a big refund isn't a good thing because you've left too much money with the government for too long.
right.
Um, Also, you know, talk to your accountant about retirement savings, and because there are all these different types of retirement plans. And Steve, I don't think we touched on this during this topic, but you know, retirement savings. There are a lot of self-employed retirement plans that are available out there where,
Right.
as a self-employed independent contractor, you can contribute to these plans, get a tax deduction when you contribute it, and at the same time save for retirement. So there are a lot of stuff that can be done, a lot of tax plan that can be done for a self-employed person. So definitely seek out the help. I'm happy to help if you do need. I think Steve's going to pass out my contact info. So yeah, thank you, Steve.
Well, thank you, Moses. I appreciate your time today, and we'll be following up on this with a few other things, as I said, with some specific industry-based independent contracting topics. We're either going to be doing some more YouTube videos or some phone-ins where people can ask questions. So once again, thanks so much, Moses, for being with us today. I appreciate your sponsorship as well, and wish all you and your family stay well and stay safe. And now I have to